place isn't ours anymore. I can't be lost. It all reminds me of our
In their manifesto, UPND, issues of balanced budget, 10% GDP growth over 5 years, reduced pay over the next 5 years from 37.5 to 22.5 is in their manifesto. Now, I don't expect the president to deviate a lot from what's in their manifesto at his inaugural speech. You've mentioned of balanced budget. Now, let's look at the other, I'll look at the targets first of 10% GDP growth in 5 years, which obviously is going to grow over the 5 years.
Yeah.
Is that feasible?
Look, if you've got the right, if you can target the right industries, the way copper is, you know, the funny thing about President Chilema is he's inherited an economy in a bad state, but picking up in a bad direction. It's almost like divine intervention pulled into the economy such that there's a global bond rally happening to help any confidence in the bond market. Stock markets are picking up quite strong, but not only stock markets, you've got the metals market rallying to the point where 9,000 looks like it's going to be the floor for a long period of time. In terms of agricultural export, we've got huge markets for it. He's adopted that as well. We've gotten out of the drought that we were facing for the last 2 to 3 years. So because he's come out of these things, and then it's like the Patriotic Front have also handed him a new power station as well. So he's able to kind of circumvent the load shedding problem as well. So is he able to grow at 10%? He needs to unlock key sectors. Agriculture, there has to be an aggressive push towards agricultural export. If I was him, and I'm just throwing stuff like this out there, we need to think outside the box. Go to universities like NRDC and give every graduate a piece of land and somebody to look after them, because now you're taking guys who are educated, who liked it, and pushing them into actual industrial farming in their 20s, so that by the time they're 40, they're like him. Okay? And they're able to have proper agri-businesses like that. Have a target to say we want 200,000, 100,000 Zambians exporting agriculture over the next 10 years. Put it in incremental steps and say every year, what's the target then to get these guys going? You can unlock a lot of growth through right now, agriculture is keeping us alive because of export, agricultural export. How do you get Zambian avocados to the USA? Instead of selling them for 4 kwacha here, they're selling them for $5 in the US market, especially because Donald Trump handed us an opportunity with making Mexican avocados more expensive. Things like that. The cannabis market. I know people don't like this conversation, but when you get the medicinal cannabis out, that competes with what's it called? With copper export.
I actually saw Mr. Sinkamba.
Yes.
He wants time with HH to discuss his marijuana. Which
that's a big industry. Just the amount that was confiscated by DEC was $900 million worth of export. Just that little amount there, because that's how big that industry is. The industrial hemp market. That's a big industry as well. What President Chilema also has to do is make decisions not on tradition. This is where the battle of the youth and the elders comes in. Young people go with trends. Older people go with traditions. If you make your policies based on traditions, growth becomes difficult. If you catch trends, using your Zambian electricity for crypto mining, for example, things like that. Not for crypto itself, but crypto mining, for example. If you do things like that, you're opening up growth opportunities in big ways for Zambia and ways to actually unlock markets. As I said, cannabis market is a big legalization push around the world. They're obviously trying to find a way to value add using the Zambian cheaper labor and the fact that we have the copper here to not only mine the copper, but to actually do some of the electric car parts themselves that require copper, making the powertrains, helping with the batteries. That is where we can offer our cheaper labor to some of those companies. If we do those steps, then getting to 10% growth is not impossible. We're doing what China did, catching global trends and then riding those waves. But if he bases policies on tradition, 2%, 3% growth will continue growing at China's pace, -3%. If he finds pockets of trends in the global economy where Zambia can plug itself in, 10% is easy.
Right. So everything you're saying, and of course that 10% GDP growth target is over the first 5 years of their term. Anthony Bwalia, his spokesperson, mentioned that they also target to reduce pay to 22.5% in 5 years. It's at 37.5. That's also achievable.
It is, and what people don't understand is tax rates there's no direct correlation between how high the tax is and how much revenue in fact, it's negative.
Yeah.
You tax more, you start making less as the government. So if you're thinking like a business person, think about this, Yoel. If you put a special at ShopRite, you find people storming in there to go and buy.
Yeah.
Exactly. You find compliance levels increase, things increase.
So you work with volumes.
Exactly.
And in this case, job creation.
Yeah. And also spending.
Yeah.
Consumer spending increases and starts to grow because consumer spending over the last 10 years has stopped contributing to growth because they've been taxed and they can't handle it anymore. So you need consumer spending down to 22, but he must marry this with production tax cuts. If you have consumption tax cuts without business tax cuts, what's going to happen is you're just going to incentivize people to import more in Zambia, and all we're going to do is help a bunch of other countries grow and not our own. But if you make it cheaper to run businesses in Zambia, you don't even have to put import tariffs on people.
Yeah.
All you have to do is make it cheaper for the Zambian business to operate in a freer environment, less regulation, and none of these things where people kill off businesses at the council and at these regulatory authorities. If you can lower the business thing and lower the tax, increase the turnover tax for small businesses, where we're going from 800,000, maybe get it up to 10 million over the next 10 years and say we're going to increase the turnover tax threshold by $1 million a year. Do things like that. And what you've got is a small business sector that's going to roar. It's going to push the employment rate. It's going to push the economy faster. And most of your growth is going to come from your small business sector as they're expanding up as well. So he really has to look at production tax cuts. In fact, I would go with production tax cuts just before that, maybe go 6 months ahead, than consumption tax cuts immediately. But I know it's to appease the audience. I understand that. But you've got to play the production tax cuts because that's where the jobs and the local production comes from and the business creation and growth comes from.
Yeah.
And you don't want to start basically making South Africa rich from Zambian spenders getting more and more. So he has to kind of work that out very quickly. And also because he's got an entrepreneurial base who want their businesses to grow. You start growing consumers before you start growing, they'll also turn on you if you're not careful.
Right. How is the price of fuel determined here in Zambia, especially that we don't see immediate benefits when the price of crude drops on the world market? We haven't had a drop or any adjustment since 2019 as ERB. So just explain to us how that works.
Okay. So basically, ERB implements a system called CPP. It's a model that basically, since 2008, January 2008, operates on the principle that the final local currency price of the petroleum product should cover all costs in the supply chain. Now, what this means now is you're basically covering the costs from a wholesale point of view, as well as the retail point of view, in order to make sure that there are no losses being incurred. And that's why you find that even when the dollar rate changes, because we pay in kwacha, but the oil marketing companies procure in dollar, it affects their cost. Now, because it has to be cost reflective to a point where the kwacha the local currency should always cover the costs, it then affects the final product. And that's where you start hearing things like subsidies and whatnot. So if we actually go into detail and look at some of the wholesale prices costs that we're talking about, things like cost of insurance, ocean losses. Remember, we don't produce the crude oil. It has to be bought from a country that produces. In this case, we're looking at the Middle East. So it has to come from that far, obviously by ship, and then it docks in Mozambique, depending on where we're pulling it from, or South Africa, and then we have to drive it by road. Now, there's the storage fees that need to be looked into, among the other things, and what they call the pipeline losses, and many other costs, refined losses that are covered in the wholesale price. When you look at the retail side, you have things like your wholesale price to an oil marketing company that you need to cover, terminal fees, excise duty, and this is where Zambia, basically, the cost of our petroleum becomes a bit of a problem.
You mentioned all those from the wholesale side and retail side, but how possible is it, I would like you to just go into detail, how possible is it that we've not had any adjustment on palm prices from December 2019? What factors, apart from them saying that we were still on odd stock, the prices of crude dropped to about 30 sometime last year, and we're expecting ERB to adjust palm prices downwards. But instead, during late last year into this year, the government actually then removed tax on fuel, which made it even more cheaper in some way. But explain to us just how all those things all those things help this.
For Zambia, what has been coming out and discussed, for me, I think it's discussed like as a rumor.
Yeah.
We don't know how effective it is because we're told that our procurement system is long because of intermediaries, people they refer to as middlemen. And because we need to cover them, in a way, we tend to compromise on whether we should maintain the actual pricing, right? For instance, we saw the kwacha depreciate against the dollar. Very little happened in terms of fuel prices. We've seen it happen again where the kwacha has appreciated, but the pump price is still the same. So I think there's this issue about the middlemen. We need to understand who are the middlemen, why the middlemen. Like you said, is it because of the import cover? We're told the import cover that we're always targeting 2 to 3 months. We've never achieved it, right? As far as I'm concerned, I'm not sure whether or not we do manage that. If we do, are we saying that we haven't exhausted the stock? At some point, we even got cheap fuel that never reflected on the pump. You remember?
Yeah.
So there's this narrative about the middlemen and what exactly they do, we really don't understand. Is it that they broker with what they call the majors?
Yeah.
The majors are the ones who now supply to the oil marketing companies, the actual producers of the crude oil.
Yeah.
What is it that they actually do? And is that the cost is that the relationship that's making it very difficult for decisions to be made that should reflect what should happen in the local market? So I think it starts with trying to understand the role of the middlemen, the so-called who they actually are. Whether it's just a person who knows the guy who's behind the refinery that is pumping the crude oil, or whether it's the guys that know the transporters and they are putting their margin inside the transaction. And because they want to make a profit, it becomes very difficult to now deliver the final value to the end consumer.
This place is in our
Okay, so the poll was really just out of interest, trying to kind of get input from different people in terms of what their views are concerning the appreciation of the kwacha. So on my LinkedIn account, I carried out the poll. I had over 15,000 views, 773 votes, and over 70 comments. So these were really interesting comments from two sides of the argument, those for the kwacha agreement. And the overwhelming majority, around 83%, were for a stronger kwacha. Now, the findings are actually indicative of the debates going on around that. So from the opposite side, for people who disagree with the stronger kwacha, they argue that the stronger kwacha might hurt imports long term, and therefore there's need to strike a balance between imports and exports. However, I tend to agree mostly with the individuals who think that the stronger kwacha is initially good for the economy. And the reasons are, we have to understand the structural contradictions plaguing the Zambian economy. Right now, the elephant in the room, as I pointed out, is a high debt level. So we need a strong kwacha. So you can imagine, you have got to finance $1 billion. If your exchange rate is 10, then all you need is 10 billion kwacha. If your exchange rate went up to 22, then you need 22 billion kwacha. Now, this is resources that are raised domestically in kwacha to pay for dollars. So a stronger kwacha, number one, is good for debt servicing costs initially. But also, even when you look at our structure of production, we see that our local manufacturing is also highly import dependent, including agriculture. High intensive commercial agriculture is also highly import dependent from the point of view of plant and equipment. So what we do need initially is a stronger kwacha to support even local manufacturing, which is import dependent, in order to build a more sustained production base.
Now, historically, the behavior of the kwacha in the past has been either sentiment-driven, government intervention, or offshore investors. Now, is there a way we could look at it in a different way? Because I know tax season would come in at the end of the month, you see the kwacha appreciating, then it goes back to a level that it stays on for the rest of the month until again another tax season at the end of the month. What in your view, will be the best scenario for the kwacha to sustain its levels?
Yeah, so obviously...
And how can we, aside from interventions where the central bank just throws dollars on the market, what is the ideal scenario for, from your expertise?
So there are different types of exchange rate regimes. I know in Zambia right now we follow what is called a managed float. So by and large, the central bank would allow the kwacha dollar exchange rate to be determined by the market with supply and demand considerations, and only intervene in instances that the kwacha really runs amok, in instances when the kwacha really gets out of the bounds. So by and large, I think we should allow the markets to operate unrestrained and intervene only when it's necessary. Now, the question is, when does it become necessary? We saw around 222.8, wages were depressed, Zambian salaries weren't going up as much as the rate of the depreciation, and ultimately it means businesses were being hurt, and then there was a pass-through effect into domestic prices from the depreciation itself. My argument, I think, from that sort of angle would be that continue with the managed float, but work towards the stronger kwacha. Now the problem is, what you observe in these debates between whether we need a strong kwacha or a weak kwacha is an inability to recognize that countries in the capitalist stages of growth are at different stages. So if development is seen as linear from less developed countries moving towards advanced economies, you realize that a stronger local currency is essential initially to build a more integrated and coordinated structure of production. Whether or not the kwacha, I mean, look at the Chinese yuan versus US dollar. It's around 6.4, 6.5 to a US dollar. The Japanese yen is more than 10 times that amount. So initially for Zambia, I would argue that we need a stronger kwacha. And the reason for that is that we are import dependent. We lack very strong linkages across sectors. But to be able to build that initially, you need a strong local currency.
Going to the exchange rate, it's pushing higher against, reversing the gains recorded post August. What is the main driver? Because today I saw some people actually disappointed that by now I was hoping the dollar would be at 5 kwacha. No. It's gone back to, I think as of today, I think it's just almost at 17 kwacha to a dollar. So what's causing what's the main driver of this reversal?
So let me explain something about the currency. We have another school of thought that is misleading people into believing that when your currency appreciates, then the economy is doing well. That is wrong for a net importer. For a net importer, you should be worried when your currency is appreciating steeply, because it means two things. It could mean that your supply side is strong, but then you've got weak demand. You don't have any demand, so the market is flooded with dollars, and it will push prices down, and that's the appreciation that you get. So, much as everyone in Zambia will be interested in currency appreciation, because we are net importers, we want the cost to be as low as possible for importing. But what we forget is that steep appreciation that we had was stimulus for most business entities, because it gave them an opportunity to quickly take advantage of that opportunity they never had in pandemic period when exchange rate was 23. So they took advantage of that. So what I'm trying to say, Yoela, is that there is growth coming back into the Zambian economy, and growth for the Zambian economy means more imports. So the more you see imports coming in, then you know that economic activity is back. But then economic activity coming back means that dollar demand will do what? It will scale up. And when dollar demand scales up, what happens to the price of a commodity when demand goes up? It starts to push up. And that's why you are seeing depreciation pressure. And this is where now the central bank comes in to say, at what point do they intervene, okay, to stabilize the currency? But
I mean,
remember,
we had that SDR that came up a month ago. They can't use that? The special drawing rights?
Well, they can, Yoela. I was actually going to get to a point where I was going to tell you that there's been aggressive intervention in the last week. This currency had actually crossed the 17 mark. It's actually come back to 16.9, somewhere there. So yes, you could have the SDR money, but you see, intervening for currency stability is a cost, Yoela. You burn reserves, so you can't always be intervening, because at some point you deplete your reserves. And what will you have? So the more sustainable approach is to build reserves that come from increased economic activity.
Yeah, not SDRs.
Well, your SDR is there to
That's
give
a
you
buffer.
reprieve
Yeah.
in the medium term, but that doesn't mean that we shouldn't focus on growing this economy, boosting manufacturing exports so that we get export revenues, and a portion of it can go to reserves. So that's how it must be looked at. So the currency pushing upwards was the economy telling you something, that it's growing. We've been talking about growth. We wanted growth. So a lot of people have proxied growth with currency appreciation. I've heard people, and very learned people, talk about currency appreciation and say the economy is doing fine. How is the economy doing fine when your currency is appreciating and you're a net importer? Unless you are an exporter and you're collecting more, it's a different ballgame. So it's a function of a lot of things now moving. The economy is trying to expand, it's trying to grow, and then you've got everyone trying to get equipment and machinery from outside. People are trying to import cars because the exchange rate is more favorable than where it was before August. So all that is at play, and it's pushing up, and it's pushing the currency, and that's what's causing pressure.
This place is in a
Let's pick 3 to 5 years. Let's pick the 5 years for the UPND government. The first 5 years, should they move on to the next term? So what role do you think ZAM can play right now, starting now in the next 5 years, in terms of helping transform the economy?
So it's at a number of levels. Number one, the SMEs, our role as ZAM, especially that we have these large manufacturers, is to give the tidbits to SMEs to help them move from the current stage where we see them operating maybe a year or two, the next they are gone. It's to help them learn what really makes business thrive, what really makes companies stick out and make profit at the end of the day. So that's exchange of information and helping them to grow. So there will come in very handy in working with the Ministry of Small and Medium Enterprises, because that mentorship, that business growth, that growing of SMEs to becoming large enterprises is that which we have already learned with the big manufacturers that we have, and they can pass on this information. Number two, when they speak of green economy, our role is to help manufacturers move from being unconscious of the environment to being more conscious of the environment, to being more sustainable, working with people, working with the planet, working with profits. So there we come in to help our manufacturers know how to build in the processes and systems to make them be sustainable. And then of course it's also ensuring that we grow the economy, because this is the biggest thing that even in the budget was said, that it's it's a budget of growth, and growth should come from the manufacturing sector. So in as much as we are asking the government to give us certain provisions, our role will be to ensure that that growth comes by making sure that production is happening within this economy and bringing about the job creation that the government would want.
Now, Zambia signed up to the African Continental Free Trade Area last year, and I think it came into implementation this year, if I'm not mistaken. Would you say Zambia is well placed? I know just when we were going through that consultative process, some stakeholders locally were saying, no, Zambia, it's not fair for Zambia because we don't have the capacity to compete with the likes of South Africa, Kenya, the big countries that have huge manufacturing industries. But we still went ahead, and of course we signed up to the AfCFTA. Now, do you think Zambia is well placed to compete at that level, or as ZAM, there's a way you want to place Zambia on that stage where somebody in, for example, in Ghana sees a product from Zambia and they're like, oh, this is good stuff, and they buy into it?
Of course, the AfCFTA has brought jitters, and jitters from various levels. But it's important to kind of like give it context. There are companies that are small, and definitely need support.
Yeah.
They need the protection. And I think with the agreement that has been signed, protection has been given to 12 specific subsectors for a period of 12 years. So we are saying for the next 12 years, we'll give these people time because we have protected these particular goods. And some of them are the many food and beverage items that our small manufacturers are making. So they've been given 12 years, and no competition will be happening on those particular items.
And the 12 is the subsectors. Is it an agreement in the African Continental Free Trade Area, Africa-wide, or just Zambia?
Zambia has said for us, these goods, we will not allow for reduction of duties because they are special to us and we want to protect them and grow them. And then there are others. We have our sugars, our cement, our copper cables.
Of course, yeah.
They are competing favorably and quite well in the region. So if we close the market on these, it means that we cannot take them out, we cannot export. So for those, the market has been opened because we know that these are competitive, they are already taking advantage, and we need them to move from just exporting into maybe Kenya and Burundi to going all the way up to Egypt and West Africa. So if we close the market on these ones, then it means that we cannot grow. And so that is where the balance has been struck on the African Continental Free Trade Area, and it's an opportunity for us because in the meantime, as we are waiting for these 12 years to elapse, the people have to learn how to ensure that their goods have the standards, they have the right packaging, the right labeling, so that by the time the competition is open, they are able to compete.
The president actually has set the tone. He's calling himself the chief marketing officer for the country with the various trips that he has taken. Now, taking the lead in transforming Zambia's economy, he actually has opened up what was a vague market in the DRC. He's made it very clear now, and he's taken a trip to DRC recently. A number of SMEs, 50 of them, went on a fact-finding mission. Some of them actually came back with signed deals. How can businesses now position themselves as Zambian businesses into, making that potential in DRC actually manifesting? And what businesses do you think actually stand to take the lead over others?
Yeah, well, my first view, firstly, in terms of us having to exploit the DRC market, is that you'll appreciate that as a country, DRC has already been our largest export destination. I think we've been between 25 to 26% of our exports is through the DRC. The key aspect that you see is there are a number of things that we need to be able to resolve. Is firstly that most of the exports that we have that go into DRC are either going through Kasobalesa border post or through the Mpolongo port. Is that we need to be able to sort out our infrastructure. In sorting out our infrastructure, what we really want to do is to be able to eliminate the informal trade. There's a lot of trade that is going there, but there's more trade that is informal. The more trade that you see that is going to DRC is a guy who has packed 10 bags of cement on a wheelbarrow and is pushing it across the border. Or this kid who's carrying 15 trays of eggs and is walking across the border. That trade is then not formalized. So that trade we have not been able to measure. The one we measure is this truck that is 30 ton that is actually going through and it's got documentation that need to be verified. So we need to be able to sort out the infrastructure that speaks to having to support this, because then the trade that we're actually generating there is more than what we're actually recording. And to do this is that the traders that are doing this must be given the incentives for them to become formal. I cannot just become formal because you want to count me and my money, okay? So the real issue is that you need to be able to give me incentives for me to be formal. This then starts to have the resources that we're generating actually coming to the banking system and support the growth of the economy. And I think as a country, there are a number of areas like that for which we need to be able to develop, which is for us to be able to maximize that market, is that we need to develop our agriculture value chain. That when we do produce from the small-scale farmers, we're able to consolidate this and are exporting as a country. Right now, what you do see is that there's a trader who a small-scale producer who is going to producing their eggs. They load their eggs into a truck and drive to the border and stand there by the border until somebody comes and buys. They get their cash.
And they drive back.
And they drive back. So it is still informal. That money is not recorded. And we need to be able to sort this out. So consolidation facilities that are going to be able to ensure that we are able to get all the farmers that are producing eggs to be able to bring their goods into one consolidation facility, and then we can export from this consolidation facility. And I think that is the first thing. So we cannot maximize that market until we sort out our local issues. The basics around having to be able to export. In terms of the business entities that are going to benefit, this has already been general knowledge. You don't have to look for them. Everybody knows that if I've got this particular product, I am going to go and sell in Kasumbalesa. There are a number of issues that also come into play if you're looking at cross-border trade, is that our traders, generally speaking, cannot cross over to DRC to do their trade. They have to stay on the Zambian side. Otherwise, the trade ethics change, and you might lose your goods.
True. I hear security reasons as well.
The security reasons as well.
On the other side,
so in terms of our chief marketing officer, is that those are the key policy issues that we needed to be able to review. That can a Zambian actually trade across into the DRC, because it doesn't happen. There are also the issues that we've had in terms of bilateral agreements, in terms of trade, as to what goods we can export into the DRC duty-free. And right now, the Africa Free Trade Zone agreements have also come into play, but I think all the countries are having to work towards having to agree on specific products that they can actually allow. This is due to the fact that you can't have an open policy where everything comes in duty-free. And the reason is that there's a very greater likelihood, because of the imbalance between the trade between the two countries, that one country is going to lose a lot of revenue by not having to do this. And thus it is important that they're able to negotiate their positions on this. But I think in terms of the businesses, we all know the businesses that we have, the goods that we've been exporting to the DRC, and you need to be able to position yourself to be able to produce those goods. But it's important that we set up the infrastructure and the logistics, as well as pre-export finance, to ensure that we can increase the quantities of that.
The president has been saying he's a chief marketing officer. He's carried a team to DRC. And I think all his trips around, he is pushing the agenda of the private sector, where all of you belong. So I think the government is on the right track. Let's just give them time. And if you can allow me, we'll strike off expectations from government. I know Honorable Njapao wants to say something from a political side, but I think because of time, we'll allow Mizinga to tell us what she can offer as a bank. You can also address the impact. I mean, you're a bank and it's a business. So COVID has also impacted the bank. So maybe we can actually go to the next one. So what can you offer these ladies and their businesses? And then also, what has COVID done or negatively to the bank? And perhaps maybe I can even go into possible innovations and opportunities.
When you look at the entrepreneurs, and I've spent a lot of time with the Minister of SME, I've spent a lot of time with the Minister of Commerce and Trade, and some of the issues that the ladies are raising, they have raised them themselves. When I was speaking to the Minister of Commerce, he says, look, I want to get to a point where we only have one license. Because when you look at the challenges that we have now, you need about 25 licenses for you to start a business. You know, he was saying when you enter an office, you need 25. You just see all of them, 25 licenses. And it speaks to the concerns the ladies are talking about, which is the cost of doing business, because every license costs money. Every license costs time. So our expectations of the government is let's get to that one single license. I think that is really going to help. I think the next point that they've spoken about is the access to finance, which is really where we come in, and the issue of collateral, which is a big concern. And they've also spoken about the market. So So when you look at what we need to do to support the ladies, now that we have an enabled environment, you know, the UPND government has created an environment where we are free to do business. We don't have to worry, and we understand the expectations. So there's a lot of positivity, you know. So what the big issues is, firstly, the access to market. For us in banking, markets matter. What you are going to do with your product matters. And believe me, ladies, that's the crack of, are we going to give you money or not? It's just where you're going to sell your product. If you have your product and you've got a market, like the Honorable saying here, that you can go to China and she can sell all her honey within an hour, then we can do business. Because if you don't have the market, where do we even start? So that value chain matters. The value chain of, yes, you are producing, and this is what you're going to do with your produce, and you're going to get the market, then it's easy for us to support you and structure. So the ambassador here will attest that in the last 1 month, we have taken SMEs to the Congo. And the president has been talking about the Congo to say, look, there is a market. Look at the Congo. Why is the Congo important? It's important because then it provides a market. Because when you have a market, you've got business ideas. We don't have to go there. You know what you're doing. But when you have a market, we bring it together and say, we can deal with the access to finance. Granted, there are issues of collateral. So what we have seen in the last 2 months is, and I'll pick one because, you know, they've allowed us to talk about that, USAID. So USAID has brought in $20 million, you know, guarantee. And this is meant for SMEs and businesses and entrepreneurs like the lady sitting around the table. And what they've said to ABSA is, let's go into an agreement between USAID and ourselves where if we find a good business propositions, there are a few things we're going to waiver. Number one is going to be the collateral. We won't have to talk about collateral because we understand your business. Number two, the money is going to be cheaper. And number three, it's going to be long term. So we are able to support you. We can support you as ABSA, but we can support you better with the risk mitigants like the likes of the USAID has brought in. So that's what the new government has brought in. It's brought in the positivity where USAID, and we're speaking to the president last week, and they were saying, we are keen, we want you to close about 5 of these deals before the end of the year. You know, and in short, they're saying, where are the ladies? We want to give them the money. So show us, so a few things. Show us the market. Yeah. Show us the business propositions. Show us that what you're doing is working, and it is. Then we're able to scale up. Their model is scale up.
Yes.
Yeah, you've got the business, but how do we help you scale up? And of course, there are other companies like CDC or EIB who will go into startups as well. So just to sum it up, the market is positive. The signing of the IMF Staff Level Agreement is great. There's still a lot of work to do to deal with the fact that we're still in default and we still have to restructure our debt. But as we are going there, ladies, the market is open for you. You know, we are here now to support you. We are looking for you to actually say, let's now talk about it. Because if we can't do it in our own right, we will bring the likes of USAID, who've said we've got $20 million, and the program is called EDGE. You can Google it. Yeah. You know, it's called EDGE, you know, USAID EDGE, and we can sit down and talk about it. But I'm only talking about USAID because we've got permission to talk about them publicly. But there are many others. So in short, we are going places as Zambia. I'm excited. Yeah. I'm really, really excited. Yeah. And maybe my final words is, to everybody out there, do something. Don't just do nothing. It doesn't matter whether you are selling a cereal or whether you are growing cassava. Whatever you're doing, do something. In this environment, the government will not bring in free money. No. I think the days of CEC are gone, right? Here they'll give you an enabling environment, but you do something to meet us halfway where, you know, Minister of Commerce says 1 license, cost of business doing goes down, USAID comes in with a guarantee. We are on to big things. Right. Thank you.
We've lived with COVID now for 1.5 years. So I've been telling colleagues that I don't feel the Omicron variant to be that much, you know, in terms of negatively impactful to the general public, because we know how to live with COVID. People are vaccinated or are getting vaccinated, and then I think we are able to navigate. But as a country, what sort of negative impacts do you anticipate during this fourth wave crossing into the new year?
Well, I mean, just generally first with COVID, the impact in terms of your tourism means that, your tourism recovery is
slower.
It's a lot slower. I know you're talking about vaccination, but, it's interesting if you follow what's happening in South Africa and particularly in Denmark. I was reading a particular study, and it looks like the reason why you're seeing that significant amount of an increase in your COVID infections is not because of the capability of Omicron to spread, but it's really because of vaccine failure.
Yeah.
Now that's why you've got countries now offering booster shots. I think ours are coming.
Yeah.
Is it as of the 27th?
Yes. Yeah.
But the general thing is that you've got a significant amount of your developing countries who have not even vaccinated more than 20% of their populations. You've got developed countries who have vaccinated significant amounts of their populations. Now they're even vaccinating your teenagers.
Yeah.
On top of that, they're offering booster shots. So there's some sort of, that term which has been called, your vaccine apartheid.
Of course, yeah.
There needs to be better efforts at vaccine diplomacy. For me, what I find so ironic and actually very ridiculous is that the more you have your developed countries holding onto your vaccine supplies, and the more you have your developing countries not being able to vaccinate a significant amount of your population, the larger the potential for more variants.
Of course, yeah.
Which tends to impact the economic, everyone else. So I mean, it's ridiculous, and I understand the WHO's gripe and their comments with regards to that. But that said, I think COVID is here to stay. 2022, 2020. I don't think you're going to see significant populations within Africa, particularly vaccinated up until 2023. And because of that, I think we're getting to a point where I think we're getting used to it.
Yeah.
I'm not certain that you're going to have the same manner of lockdowns that we had in 2020. And I think you've seen that sort of trend spreading across the world in the sense that even though cases are increasing, you're not seeing
not
lockdowns. Exactly, no restrictions coming.
The USA just removed the SADC region from its red list once again. So the world is open. So people are managing Omicron.
Yes. Yeah. So because of that, I don't think you're going to have the largest downward impact from the pandemic happened between April and July of 2020.
Yeah.
You're not going to see that impact from the COVID pandemic. That sort of impact again is going to be much smaller because the lockdowns will be much less.
Yeah.
What we should be concerned about is inflation, I think. Specifically, the potential for inflation to be elevated for a long period of time to such a point where it causes some social, economic distress in terms of your people on the streets, you're disenfranchised, in terms of not being able to afford food prices. I think over the next decade, that's something that I'm watching out for, because I do think that inflation over the next decade is potentially going to be a lot higher than it has been over the last decade.
Yeah. Finally, then next year, what is your in 1 minute? How would you rate next year in terms of optimism? Are you optimistic looking at everything that we've gone through this 2021
for
the
Zambia,
Zambian economy and global economy?
Global economy. Yeah. Well, for the global economy, remember, I expect some sort of wobble because I do expect that the Fed may surprise the market, and you've got a high correlation between stimulus and easy monetary policy with risk assets.
Yeah.
When that tap is closed off, it will cause a lot of jitters in your stock markets, particularly your US stock markets and your developed market stock markets. Zambia, I don't think we could have gotten any worse.
So
I think
we were on our way up now.
Yeah, we are on the way up. Like I said at the start of the conversation, over the last 5 to 7 years, 70% of economic growth in Zambia was driven by the government, by public spending.
Yeah.
The reduction in the corporate tax and the sort of policies that we're seeing from the new government in terms of trying to, accelerate or trying to bring back private sector growth, which had been decimated for a long period of time, I think is very, very positive. I'm really optimistic in what the future holds for Zambia, particularly with regards to the private sector. The only concern is the size of the budget and the potential impact of that borrowing amount on interest rates. The concern I have there is, if you remember, one of the key impacts on the private sector from the previous years was the fact that you had an overcrowding or an overborrowing from the government, which elevated interest rates, and on top of that you also had a significant accumulation of arrears to the private sector. So if you remember, when we go back to that calculation, if they have to maintain that spending, there's a significant amount of borrowing that will come from the domestic market.
Yeah.
If not, then they'll have to reduce the spending. If not, then it could potentially also mean, again, an accumulation of arrears, which is not something that the IMF wants. So that's the only concern I have with regards to the size of the budget.